Good morning and welcome to Nasdaq Sector Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Masood Galsi with Nasdaq's IR Intelligence, and he's here to give us the tone of the market for the week. And despite investor concern, the risk on trade is still on. Masood, thank you so much, as always, for joining us and set us up for the week here. What are some of the things that you're looking at to set the tone for us?
Yeah, thanks for having me on your show, Jill. So it's interesting to look at the equity markets after two solid months of performance, both January and February, which was characterized as perhaps one of the best performing January and Februarys for the equity markets. It finally took a breather. We saw utilities and real estate, the defensive sectors, outperform last week. And mainly two reasons here. One, we're seeing a fatigue in trade talks. This has been a topic that the market had rallied on for quite some time, and now investors are scrutinizing the details of the trade talks. That's one. Two, we're looking at slowing, again, global growth themes are coming back to the forefront. We saw the ECB dovish, and that's because European economy is slowing, so that has been impacting markets. Also, investors are starting to look at Q1 earnings, and we're looking to see Q1 earnings soften from a very strong 2018. So investors are slightly cautious once again. And if there's anything that investors dislike, it's uncertainty, and we're seeing a little bit more uncertainty on the global growth front again.
All right, now what about the economic landscape? Because it kind of has been a mixed bag recently, particularly in the U.S.
Yes, so to your point, yes, it has been a mixed bag. It looks like manufacturing data, services data, and also retail has been oscillating. A good number of these metrics have fallen, but they have plateaued. Having said that, the U.S. economy is still resilient relative to the rest of the world. So the concerns seem to be international growth, and this is also echoed by the Fed, which stated that they're monitoring international growth. And as such, we saw, as previously stated, the ECB tilt slightly dovish. With going forward with the trade deal passing, hopefully, the question now remains, will we see the gap bridged between economic data and market performance? So look out for CapEx trends, look out for GDP growth, and look out for how the trade deal will impact earnings in probably Q2 and latter half of this year.
Well, it's really interesting because you were saying that the markets and investors don't like uncertainty, but in fact, the risk on trade is still on.
Correct, yes. So January, February, on the heels of, again, the trade talks, we saw investors buy up the markets, and as such, we saw a strong rally. And we saw, Bank of America Merrill Lynch conducted a study in which a lot of the weaker quality companies, so companies that have weaker earnings, less stable earnings, and higher debt leverage ratios outperformed the rest of the market. Now with uncertainty coming back to the market, the question is, how long will that be sustainable?
All right, now let's wrap it up here. Trading week ahead, there's a lot of data points out this week. What are you going to be focused on?
So in our division, in our business, we cater to the investor relation officers and management teams. And the highlight of this week is the rebalancing that we'll see on Friday. The S&P 500, Dow Jones, and various other indexes are rebalancing, so expect a lot of irregular trading there. And finally, to your point, some good economic data coming out, CPI, and that will set the tone for the Federal Reserve and their policy going forward.
All right, Masood, thank you as always for joining us at MarketSite. And thank you for joining me throughout the week. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.